Mark Mahaney of Evercore ISI joins us to break it all down. He just raised his Meta target by more than $100 per share, $275 now from $170, and reiterated an outperform. So, Mark, you think this is a well-deserved rally and it's heading higher. Why?
I do think it's heading higher. I think numbers went up a lot. Look, last quarter, the stock estimates got cut 20%. The stock got cut 20 to 5%. This quarter, estimates went up 20%. So, of course, the stock goes higher. And part of this, by the way, I just think I'm not sure it's great management. I just think they were so volatile in terms of the expense guidance that they gave. I think they did themselves a disservice on investors, too. But that's the past. Going forward, you still have an asset that's trading at 15 times earnings. It's not like we're anywhere close to peak fundamentals. I mean, we're going to do what? 1%, 2% ad revenue growth in the March quarter. I think you're going to see a nice improvement in that. I think we will see a nice improvement in that as we go through the year. So we've got a lot of improvement in fundamentals coming up. And it's what I call this slingshot opportunity. You get this reacceleration in revenue growth and you cut costs. That means earnings growth can really skyrocket. Like if you can get 20% revenue growth, your earnings growth is going to be materially better than that. That's the setup. It allows the stock to keep re-rating from here. I still like Meta stock.
It's so funny how the narrative changes so fast on this stock. I mean, everyone hated this stock. And I get that they've found religion on the efficiency thing. But, you know, TikTok hasn't gone away yet. That's still a big competitor, right, that they're chasing. The macro environment is far from clear when it comes to the advertising market. They're not out of the woods, are they?
No, they're not. I think what really changed here was there were a series of overhangs. You mentioned them. It's macro, it's TikTok, it's regulation. And then there was this concern by investors that it just was an irresponsibly run company, that in a time with clearly slowing demand, that they weren't managing down expenses. That was the takeaway from the last quarter, the September quarter. But they reversed it completely. And this quarter, and I think, I asked Zuckerberg about this on the earnings call, like, why now? I thought he gave a relatively convincing answer. I think he's acknowledging that the business is slower. It clearly is slower now, but it's more mature than it was in the past. And he thinks he stumbled across some real efficiency gains. And by the way, I think AI applications can really help them. And it's starting to show up. They're getting better conversions for their advertisers. So the ad units are getting better. But you set all that up and you eventually get that macro recovery. And Sarah, I don't know if that's next quarter or at the end of this year, but somewhere in that time frame, you're really going to get this really nice reacceleration in revenue growth. And I think you can buy the stock in advance of that. Again, we're not at peak fundamentals here. I think we're still far from it. That means there's a lot more upside in the stock, especially when it's trading at still a discount to the market.
You want to buy Alphabet and Amazon into earnings? I guess both should benefit from the advertising tailwind, but also both have some potential challenging read-throughs from Microsoft on cloud.
I think the setup is so different, Sarah. I think the read-throughs from Microsoft are more material, more germane than what you're going to hear from Google or Amazon. Meta did not tell you that the ad market is recovering. Maybe they suggested it was stabilizing, but not recovering. So I think you're going to see softening trends at both Google and Amazon. But the big hint to the CFOs of Google and Amazon last night, Meta management mentioned the word efficiency 28 times in their earnings call. You want your stock to go up? Mention it 29 times.
Yeah, it used to be you just had to mention the metaverse. That doesn't do the trick anymore. Certainly didn't for Meta.